Welcome to the Investing in Real Estate show. I'm Clayton Morris. So glad to have you here on this show today. Today, we're going to dive into an important topic, creative financing. Now, I've talked to a lot of investors from different walks of life over the years, and I've personally used almost all of the creative financing options that we're going to talk about in today's show. A lot of people get stuck. They get stuck in the trap of thinking that they can't invest or that investing is for, other people. It's simply not true. I think, if I can't get traditional financing, then I'm just done. I can't do anything else. I think if investing in real estate is something that you truly want to do, you can make it happen with a little determination and creativity. So when I started in real estate investing, I was like a dog with a bone. I was like nothing was going to get in my way for making this happen. Nothing. I had in the 500s for a credit score. I had $75,000 worth of debt roughly at that point. I had started paying it off. I still had student loans, but I had credit card debt. I had a very high debt to income ratio. I had also gone through a foreclosure given the 2008 real estate collapse. Before I had become a real estate investor, I had done 2 flip properties in Florida and Orlando where I lived, and then I bought a primary house where I lived. And I moved to Philadelphia for a job, and this home remained in the market crash, and I couldn't sell it, and I couldn't rent it for half of what I could have paid for a mortgage payment for it. So it just sat. And tried to work something out with the bank, and it ended up going through a foreclosure. Cautionary tale, right? But hey, we all went through it. So low credit score, foreclosure to my name. It was really brutal. But I didn't care. I look at challenges. To me, setbacks, things like that are just challenges to overcome. Anything that gets in your way, just roadblocks, to go around, smash through them. So on today's show, we're going to explore 10 ways that you can start investing that you might not have considered. Tapping into your 401k is number 10 on our list. So taking a loan from your 401k can be an incredible way to get started investing. Now, I've shared this experience on the strategy many times before, but basically, most 401k plans allow you to take a loan from your account. Now, not a withdrawal from your account, but a loan from your account. So, for instance, I used Fidelity at the time, and I was able to log into my Fidelity account. I think it was like my401k.com or something like that for Fidelity. And there was 2 options: withdraw because of a hardship, or take a loan out and borrow from it. Click that button, pick the amount that I wanted, and within like 3 or 4 clicks, I was done. And I had set up, I think because you had to put in the bank account where you wanted this to show up, I even put in the bank account information, and it showed up in my personal bank account within a few days once they transferred it over. I chose the largest amount that I could, and I was able to buy one of my first properties that way. The reason why this strategy is so powerful is because A, it's your money, right? Your money sitting in a 401k plan, okay? And B, you're paying the interest back to yourself. Think about it this way. The loan is paid back through your paycheck. And when you're allowed to, every year they switch the number, but it's like 16,500 or 17,500. If anyone knows, drop me a comment below and let me know what it is this year. I know they changed it with the pandemic and everything, how much you can contribute in any given year to a 401k plan. So I think it was 17,000 or 17,500 is the limit, right, that you can put into a 401k in any given year. Well, with this strategy, when you pay yourself back into the 401k plan, because you're paying yourself back and you're paying interest on that back to yourself, you can actually eclipse the federal limit. So not only is it your money, but when you pay it back, you're paying yourself back the interest. The interest is yours, right? It's technically a mortgage, so it's a mortgage interest deduction. On top of that, you're getting the benefit of it going back into your account higher than the federal limit. It's like a triple whammy, if there is such a thing. Anyway, anyone that has a sizable 401k plan, I would say if you've got enough for a down payment, if you don't have enough for a down payment, you might want to consider this option. So being able to pull some of that money out of your 401k, borrowing from it, not withdrawing, but even withdrawing might not be such a bad idea, right? I mean, think about it. If you're planning on leaving your job, maybe don't take a loan from your 401k. You know, you could do other options as well, but maybe not take a loan from your 401k. Think about removing it and moving it into an alternative asset class, moving it into a self-directed IRA, which we'll get to a little bit later. But you may even consider withdrawing your 401k. Now, I know that that's like, oh my God, sacrilegious. How can we talk about that? How can you possibly talk about that? The reason we're programmed to not talk about that is because who's telling us not to talk about that? Forbes, CNBC, whatever, big money networks, the mainstream media, they want you to keep your money in Wall Street, right? When you turn on CNBC, you're going to see ad after ad after ad from Charles Schwab. Put your money with blah, blah, blah. You're going to see ad after ad like that. So of course they're gonna have segments on CNBC where they're gonna have experts, quote unquote experts, who tell you, no, you don't want to withdraw your 401k. You're gonna get a penalty and a tax penalty. Okay, but it comes down to simple numbers, simple math, right? Talk to your CPA about this, and it may actually make more sense for you to withdraw, take the penalty, and then and pay the taxes, pay the penalty now than later when you're in a higher tax bracket. You're going to pay taxes on it at some point anyway. Might it make more sense for you to pay them now rather than later? Again, it's all numbers. Don't let the media scare you into this, okay? Just think about it. Think about it differently a little bit, and think about how you can access these piles of cash that you are sitting on. Remember, this is your money, folks, right? This is your 401k. Another strategy that I want to talk about is accessing your home equity. Now, if you own your primary residence or any other piece of real estate, you should consider using your equity to buy real estate. Now, I recently published a video called The Ultimate Guide to Leveraging Your Home Equity. We'll drop it in the chat below so you can check it out. Be sure to check it out because I think this strategy alone could work for you. Because in that video, I share some things to consider to determine if it's right for you. Going through the details. I'm not going to belabor it now. Not everyone is in a position to tap into that equity. Some people are in the process of moving, right? Or you might think you're not going to live in this property for another 3 years. And so tapping into that equity, getting an additional mortgage on that property might not be for you, or you might simply not have enough equity in the property right now to do that. So there are going to be things to consider. Again, please watch that video. We'll have it linked up here for you. It's called The Ultimate Guide to Leveraging Your Home Equity to Invest. Next on my list, I want you to think about finding a private lender. Now, I find that private money intimidates a lot of new investors, but it doesn't have to be scary, right? Because I think people think, well, I know the traditional route. I can call up Wells Fargo or a bank or Bank of America and I can get a traditional line of credit. I can get a traditional mortgage, right? But where do I go to find private money? You mean to tell me people other than banks have money? And the answer is yes. Yes, absolutely, that's the case. Private money can come from a lot of sources, whether it's a professional lender or a relative. What I love about private money is that it's because it's not regulated by the government or the banks. Now, I just had a caller on our Q&A show. By the way, we do a Q&A episode every Monday here on the channel where we answer your phone calls, and someone was asking about how to properly structure seller financing or private money. You can do it however you want. That's the beauty of it, right? Maybe you have an uncle that has money and just is too busy, but has money and really believes in you as an investor and likes what you're up to. Carl, I like that you're investing in real estate. If you ever need somebody to do a loan for you, I'm your man. Great. Thanks, uncle. Now, how do we structure it? Well, maybe you can structure it however you want. 30-year mortgage, 5-year mortgage. You can do it however you want. What are the terms? You and the uncle come up with those terms yourself. Draw up a promissory note, which is very easy to do. It can be 2-page promissory note. Get it notarized if you want to. It doesn't even have to be notarized, right? And then you could work with a mortgage servicing company. They're very cheap. Mortgage servicing company will make sure that those mortgage payments are coming in every month. So I've done a lot with private money. Is private money right for you? That depends on your comfort level. Are you willing to approach lenders? Will you research the process and make a deal that is mutually beneficial? Again, My go-to person on this is Susan Lassiter-Lyons. She's got a great book called Getting the Money. Okay, and one of the simple strategies that she talks about in the book Getting the Money is one of her pitches, okay, is when she's talking with someone about getting private money, and it all comes down to numbers. When she'll ask that person, what are the returns that you're currently getting with your retirement vehicle, or what type of returns are you currently getting with your money in the stock market or your dividends or whatever it is? Well, 4%, 5%. Okay, great. Well, Uncle Buck, how would you like it if you could get a 7% return instead? Oh yeah? Tell me more. Great. Well, I'm investing in this property right now. Personally, it provides me with an 18% cash on cash return. I would like to talk to you about a private money note on the property, and I'm willing to go above and beyond what you're currently getting for, in your portfolio of stocks. I'll pay you 7% if you're able to provide a 30-year note or 15-year note on this prop, or 5-year note with a balloon payment after, however you want to structure it. But read her book. Read Susan Lassiter-Lyons' great book, Getting the Money. She teaches you how to structure it. She teaches you how to pitch it, and she demystifies the entire process. It's a great, great book. Highly, highly recommend it. Next on my list for creative financing is working with a partner. Real estate partnerships can give you access to knowledge, funding, the ability to grow your portfolio. Whatever your missing link is, you can find it by working with other partners. Now, I have another video. I have a lot of videos, but I have another video that specifically covers this, covers working with partners, how to find and vet partners. Okay, that's important. Plus, how do you do your due diligence before getting started? A partnership needs to work for everyone involved, and you really have to cover all of your bases before diving in. So make sure that you check out this other video. The video is called How to Buy Rental Properties with Multiple Investors. So we will link that up in the description below as well. Check that out, How to Buy Rental Properties with Multiple Investors. Again, if 4 of you come to the table with $10,000, that's enough for a down payment on a brand new construction rental property. You finance the rest of it. You each come with $10,000. That's enough for the down payment, $40,000. Then all of you, creating an LLC, you all have now ownership of that cash flow and that property in that business. A brilliant strategy to use and work with partners. Next on my list is moving old IRAs or other retirement accounts into self-directed IRAs. Now, a lot of people have old retirement accounts. I had one from when I worked years around the country, and it was like $22,000 in some IRA that I had. And it was just sitting there. It literally never moved. It never grew. It never did anything. It was like an old t-shirt in the corner behind a dresser that fell back there and you forgot about. Just sitting there doing nothing. Nothing. Wasn't collecting interest, wasn't even collecting dust, because it was just doing nothing, right? And that's the thing. A lot of people have these old retirement accounts from past jobs that they've forgotten about. And now some of you may say, Clayton, that's crazy. I'd never forget about money, but it happens all the time. You think it's in a retirement vehicle, you leave that job. Well, you don't transfer it over because it's a different structure. So you just leave it sit in this stock-based retirement account that's just sitting there, and you don't do anything about it. It's not that you've forgotten about it. It's that it's out of sight, out of mind. So it's sitting there doing nothing. Well, what if you could roll those monies over into a self-directed retirement account? I mean, it's a fantastic way to get started investing. So moving that over into an SDIRA, which is amazing, you can start using that. There are a lot of specialties out there. Like, get started by logging into your online portals, checking your statements today. So maybe you've got some old accounts you forgot about. Just log in and see what they're at right now. Maybe you'll be surprised, right? Maybe you'll be surprised you've actually had some interest and you've done well. Maybe they were in some growth funds and they've actually performed. Be surprising. Or, if you don't have those access points, call your previous employers and they'll point you in the right direction. If you want to find out, by the way, if you have some of these funds, we can help you with that. Our team can do that. If you do find that you have some of these funds, we can help you on our team get set up and structure a self-directed IRA. That's what our team can do. in the link below, if you want to book a free call with our team, we can actually get you set up with a self-directed account in 10 minutes, and we'll do it for free. We'll do it for free. We'll set it up totally and take care of it for you and help you roll those funds over. So just book a call with our team. Just go to morrisinvest.com. We'll have a link in the description below, and our team can help you do that. Just schedule a free call if that sounds like something that you'd be interested in. Our experts are specifically trained on this, on the self-directed account. It's kind of how we cut our teeth, actually, is helping people do this. Next on the list is selling non-performing assets or utilizing a 1031 exchange. Now, you might have properties that you've had in the family that maybe you inherited or that you had as investments in the past that just aren't doing very well. They're just not performing. But maybe they've appreciated nicely. I mean, who knows, right? All different styles and strategies here. Look at your balance sheet and see if you've got anything on that balance sheet that isn't putting money in your pocket. This could be an underperforming rental property. It could be a car. It could be collectibles that you have. Maybe it's old comic books that you could sell. Maybe you have boxes of comic books like I do. Actually, some in the background over here. You know, a buddy of mine sold his comic books for thousands of dollars. If you do happen to have a rental property, great. And if it's not performing, perhaps even better, because now you can actually utilize a 1031 exchange to essentially trade that property for another higher return on investment property without paying taxes on it. You can watch again. I have a video on this. Imagine that. It's a video called On 1031 Exchanges. I hope you get a chance to see it. It's called The 5 Powerful Benefits of a 1031 Exchange Explained. So we look at how a 1031 does not have a lot of rules and regulations, actually. It's pretty wide open. So you, excuse me about that. Let me rack that back. The structure of it to buy a property does not have a lot of rules and regulations, but the process of acquiring a property inside of a 1031 exchange can be a bit of a pain. Okay, so there are restrictions, and there are time limits and restrictions. But as far as the type of property, all it has to do is be equal to or better than what you've currently got. And the sky's the limit on that. So again, our team can help you with that, but be sure to watch that video on how to set up and structure a 1031 to make sure you're meeting all the requirements before you get started. Again, this is something my team can help you with. So again, for free, we're happy to help you with this. Give us a call if you'd like to discuss this option. Again, just go to morrisinvest.com and book a call with us. Number 7 on my list, using savings. Okay, I know this one is kind of obvious, but one common hang-up I see is that people have this nest egg and they're too afraid to touch it. Maybe you've got some cash sitting there that you think is going to be used for taxes. Now, we had a tax account that we used, a specific account that was sitting there that we had the opportunity to use. And I said to my wife, look, we've got this account that we've structured it in such a way using the Profit First methodology, the great book by Mike Michalowicz, and paying ourselves first, but then we also have a separate bank account for taxes, and that money was sitting there. Now, in much the same way that I don't want to overpay Uncle Sam, why in the world would I want to pay more money to the U.S. crooked government, okay, then they are going to keep that money and then they're going to issue me a refund? So wait a minute, let me get this right. For a whole year, then, the U.S. government gets to use my money and they're going to issue me a refund? That's why our tax accountant, Tom Wheelwright, says you should never want a refund. Like, refunds are just, that means that you haven't done your taxes correctly, right? So that means Uncle Sam is using your money. Wouldn't you be better off using your money in the meantime? So now this can be a bit tricky. You really have to make sure, especially if it's a tax account, that you're being strategic about it, okay? But instead of that money just sitting there doing nothing, why don't you leverage that, okay? You could even take a loan out against that cash in an account. That's how rich people do it. You know, if someone's got millions of dollars in Bitcoin, they're not selling their Bitcoin in order to buy a yacht or buy a business. No, they are leveraging it. They're getting a loan against that Bitcoin. They're getting a loan against their assets. They're not selling the asset. In much the same way, if you've got all this cash sitting there, get a loan against it, right? Getting a personal loan against that cash on hand enables you to leverage that. There's all sorts of ways that cash on hand can be leveraged, right? But if you've got it sitting in a savings account collecting minimal interest, you may want to start using those funds to buy a cash flowing rental property. So if it's not tied to tax payments, if it's just sitting there, maybe you've got 40,000, maybe you've got 30,000 sitting there in a bank account making a very little interest. Why not leverage that, put that into an appreciating rental property that's cash flowing? I do not want cash. With the US dollar on this roller coaster ride, if you have cash in the bank, as Robert Kiyosaki likes to say, savers are losers. And he doesn't mean that you're a loser like, big capital L loser on the forehead. What he means is every day that money is in that bank account, of course, it's losing value, right? It's not keeping up with inflation. The value of that dollar is worth less tomorrow than it is today. So why would you want it in a bank account? Put it into an asset that is a hedge against inflation, right? And can produce monthly cash flow. Also gives you the tax benefits of it. So again, a no-brainer from my perspective. But people say, what about a rainy day fund? Okay, what kind of rainy day are you expecting that you have $50,000 in a savings account? Like what kind of rainy day fund is that? Like if a water heater breaks in your house or you need new car tires, it's a few $100. Like let's be realistic about how much of a rainy day fund we need. And by the way, moving it out of cash and into a better asset that protects your family, that is more of a protection for legacy wealth than the cash on hand. And it's not that hard to sell a house. I know that people say, well, cash is liquid, property is illiquid. What if I have an emergency? I get it. But look, it's not that difficult to sell a house. In fact, there's such a demand for properties that houses can sell within weeks. Okay, you can go to a closing if, for God forbid, you needed that cash out of a property. That's an extreme example, but it's not like buying a house puts this money in some sort of a cage that you're unable to get to from now on. It doesn't make sense. It's absolutely available for you to be able to sell or even to borrow against if you needed to. I have a buddy who, he's got assets, and instead of using that cash, he's taking loans out against those assets in order to fund other purchases for his business. That's how you do it, guys. So this rainy day fund, you got to think differently, okay, about this stuff. This isn't like, the 1980s, how we were taught by our parents about how to invest and how to save money for a rainy day. We got to think differently about it, okay? Put some money out of your savings account and into passive income. Next option here is getting into house hacking. That's number 8 on my list. Now, house hacking allows you to reduce or even eliminate your housing costs altogether by buying a duplex and then renting out one unit, or a triplex or a quadplex. Then you're still within the residential property limit, right? 1, 2, 3, and 4 is residential property. 5 units and more is considered commercial property. So if you live in the right market, and you wouldn't mind moving in, into a new property where you're going to be sharing it somewhat, it depends on the property size. This could be a really great way to get into real estate investing. I've got a full house hacking video on here. Of course I do. That goes into these benefits, a 3-step process to get started and the biggest mistakes to avoid. So I want you to check that out. It's, again, it's a 3-step process to get started in house hacking. It's called House Hacking, the Ultimate Guide. We've got a full video here on the channel to do that. I have a member of the family who is a member of the military, veteran, and who served in Vietnam and was seriously considering doing that. He didn't end up doing it, but he was going to. He got very, very close to doing the house hacking because of a VA loan. Think about this for a second. He would have been able to buy the property with a VA loan, 0% down, okay? 0 down. He could have moved into one side of the property. He was considering doing this in Vegas. They were looking at Vegas as the market they were going to live in. In the end, they didn't, but because his daughter lives there and so forth. But they were going to move into this house. He was looking at seriously trying to find something. It was really difficult to find a property, though, in Vegas that met the criteria. He could have paid 0 down with a VA loan, moved into one side of the duplex with his wife, and then had this asset that was producing cash flow and covering the mortgage by the tenant living in the store in the property next door, or the door next door, the other side of the duplex. Great strategy to get started with real estate investing. All right, next on my list is freeing up funds. Okay, number 9 on my list. So what do I mean by that? I mean paying down debt faster. or increasing your income. I know that might sound obvious, but what if you've got a property that you live in? It doesn't quite have the equity maybe that it could, but what if you put a lot of focus into paying down that debt so that you could increase the equity position in that property and then take out a home equity line of credit on that property? Or simply increasing your income, right? By reducing our expenses, we get a raise. One of the things that I think is really fascinating is when people go through our boot camp. If it's totally free. If you go through our boot camp at morrisinvest.com/bootcamp, it's a 90-day free week by week boot camp. And one of the things you'll find is that when you learn about these assets, you learn about these liabilities, and we start pointing you in the right direction, you'll start taking a better accounting of your overall expenses in your family. And one thing you'll notice right away is, oh my God, I'm spending all of this additional money on this stuff, on random subscription services and this newspaper, this piece of software. You'll find stuff, trust me, you'll find stuff that you didn't even know you were spending money on. Eliminating that stuff gives you a raise. You know, this is for anyone out there who has the ultimate goal of investing in real estate, but maybe you're not quite ready yet. You know, if this sounds like you, I would suggest that you start preparing, get your finances in order right now, pay down some of this debt, close off some of these subscription things that you're not even using anymore, or simply even picking up a side hustle. There's incredible ways to be able to make, thousands of dollars a month online from home right now. Just think about it. I'm just going to throw out a few ideas, just a few general ideas, right? One thing you could do, you could lend your voice. Maybe you're a voiceover person, maybe or not, but maybe you could get good at it very easily. Go to acx.com. That's Audible's, that's Amazon and Audible. They need voiceover people because the incredible amount of audiobooks that need to be produced. Do you have a few hours a day that you could work from home with a good microphone and just sit down for a few hours and record? There's audiobooks. You just put your name up there, you put up your voice files, and they pick you. That's one. Maybe you know you can teach English. Maybe you know a different language that you can teach online. There's all sorts of, incredible ways for people to leverage their skills online from home and make a few $100 or $1,000 extra dollars a month, and then turn that into a better equity position in your house or cash on hand that you can then invest in real estate. Again, just go through my free financial empowerment bootcamp. It's totally free. Go to morrisinvest.com/bootcamp. It's a 90-day program that you can use to learn about assets, liabilities, and it's going to point you in the right direction. So I hope you will take me up on that. And number 10 on my list is to move out of the volatile stock market. Just look, every day I'm watching the markets. Every day it's crazy. So the stock market's so tied to the volatility of what Vladimir Putin is going to do by either invading Ukraine or not invading Ukraine. If the Fed is going to raise rates in March or they're not, right? What does the 10-year Treasury look like? What is the oil? What are oil prices and how does that affect the broader market? What about the tech indices right now? The tech heavy NASDAQ. Like, okay, did Apple have a bad earnings report? Will they take up a huge chunk of the NASDAQ? That drops the NASDAQ. Everything gets thrown out of whack. Do you want your family's future tied to that? Absolutely not. Again, a few long-term growth stocks, long-term value stocks that you keep in your portfolio, fine. I have no problem with that. I know some people absolutely have a total problem with that because it's just paper assets. It's not real assets. Others, like Peter Schiff, would say, no, it's actually investing in a company. You're looking at a company and you're investing in that company. Great. I disagree. I still think it's paper assets because if that company goes out of business, your paper asset is going to be worth nothing. The board members will get paid first. The shareholders will get zero. But Ford's not going out of business. Apple's not going out of business. So there are some smart strategic investments you could make, right? But I would take a look at any stocks or investments that you already have and consider selling them to buy real estate. Remember, stocks are simply a paper value, a digital value. But real estate is a tangible asset, a real asset that produces cash flow. And again, you could argue and say, yeah, but I own AT&T stock and it gives me a 3% dividend. Great. Hope you enjoy your 3% dividend from AT&T. What happens if there's some sort of SEC regulations, or God knows what happens, or FCC regulations for AT&T. I mean, who knows, right? What is your stock worth then? It plummets 15-20%. Keep going with your dividends there. Again, it's fine to have a small portion of this there. Great. You've got a 401k, you've got one of those retirement plans, but nothing beats real estate as a tangible asset that is a hedge against inflation. I'd love to hear your thoughts on these 10 choices, 10 creative ways to invest in real estate. Be sure to drop me a comment below. And if you're not already a subscriber to the channel, we have tons of great videos here on the channel to help you become a more intelligent real estate investor. So please subscribe to the channel.